PGIM Short Duration High Yield ETF, a deep dive. In the ever-evolving landscape of exchange-traded funds, ETFs, the PGIM Short Duration High Yield ETF, PSH, has carved a niche for itself by catering to investors seeking a blend of income and relative stability in the high-yield bond market. This article delves deep into PSH, exploring its investment strategy, key features, potential benefits and drawbacks, and how it stacks up against its peers. Understanding high-yield bonds. High-yield bonds, also known as junk bonds, are issued by companies with lower credit ratings. This inherent risk translates into higher yields compared to investment-grade bonds. While this can be an attractive proposition for income-seeking investors, it also comes with the potential for greater price volatility and defaults. PSH's investment approach. PGIM Short Duration High Yield ETF seeks to provide investment results that track the performance of the Bloomberg Barclays U.S. Short Duration High Yield Corporate Bond Index. This index comprises high-yield corporate bonds with an average maturity of less than 3 years. By focusing on shorter maturity bonds, PSH aims to mitigate interest rate risk. When interest rates rise, longer maturity bonds experience greater price declines compared to shorter maturity bonds. This is because the present value of the bond's future cash flows shrinks when discounted at a higher rate. Furthermore, PSH employs active portfolio management, strategically selecting bonds within the index based on various factors, such as credit quality, liquidity, and issuer fundamentals. This approach seeks to enhance returns while managing risk. Key features of PSH. Expense ratio, 0.35%. Average effective duration, approximately 2.4 years. Yield, as of January 24, 2024, the SEC 30-day subsidized yield was 5.12%, and the NAV distribution yield was 5.92%. Underlying index, Bloomberg Barclays U.S. Short Duration High Yield Corporate Bond Index. Top holdings, as of November 30, 2023, the top holdings included bonds issued by companies like Chevron, Ford Motor Company, and Kraft Heinz. Potential benefits of PSH. 1. Higher income. Compared to traditional bond ETFs or savings accounts, PSH offers the potential for significantly higher income due to its exposure to high-yield bonds. 2. Reduced interest rate risk. The focus on shorter maturity bonds helps mitigate the negative impact of rising interest rates on the portfolio's value. 3. Diversification. PSH provides exposure to a diversified basket of high-yield bonds, potentially reducing concentration risk associated with investing in individual bonds. 4. Liquidity. ETFs generally offer high liquidity, allowing investors to easily buy and sell shares throughout the trading day. Potential drawbacks of PSH. 1. Credit risk. High-yield bonds carry a higher risk of default compared to investment-grade bonds. This can lead to significant losses if issuers fail to make their interest or principal payments. 2. Volatility. The high-yield bond market can be more volatile than the investment-grade bond market, leading to potentially larger price swings in PSH's share price. 3. Limited upside potential. the focus on shorter maturity bonds may limit PSH's potential for capital appreciation compared to longer maturity bond ETFs. Comparing PSH to peers. Several other ETFs offer exposure to the high-yield bond market with a short-duration focus. Some notable examples include SPDR Short Duration High Yield Bond ETF, SPYD. Similar to PSH, SPYD tracks an index of short maturity high yield bonds, but with a slightly lower expense ratio of 0.25%. iShares Short Duration High Yield ETF, HYDG. This ETF also tracks a similar index, but has a higher expense ratio of 0.4%. When choosing between these ETFs, investors should consider factors such as expense ratio, underlying index, and historical performance. PSH's combination of active management, competitive expense ratio, and focus on credit quality makes it a compelling option for many investors seeking income and relative stability in the high-yield bond market. Conclusion. The PGIM Short Duration High Yield ETF offers a unique blend of income potential and reduced interest rate risk for investors seeking exposure to the high-yield bond market. While it comes with inherent risks associated with high-yield bonds, PSH's active management approach and focus on shorter maturity bonds can help mitigate some of these concerns. By carefully considering the potential benefits and drawbacks and comparing PSH to its peers, investors can make an informed decision about whether this ETF aligns with their investment goals and risk tolerance.